Welcome to another episode of the Wealth Building Strategies Podcast. I'm your host, Jeremy Constantino, and today I'm honored to have as a guest on this show, Jon De Los Reyes. Welcome, Jon.
Thanks, Jeremy, for having me.
Did I pronounce your name right? Is that okay?
You got it. You got it. Great job. With a roll of the R there. That's great.
Yeah. Well, Jon is the founder and owner, are you co-owner, founder and owner of DLRX Ventures, and they have accumulated over 1,400 apartment units. And recently, this year, they even made a $78 million purchase, which was their first GP purchase to be a general partner. And that's exciting. I love to see those big numbers. But welcome, Jon.
Thank you. Thank you. Yeah, we're very blessed to be in that deal. We've been working several months for that, and out of the blue, we got invited, and we were so blessed to be part of that. So we can get into
Yeah,
more
getting there.
on that one for sure. Yeah.
So, also, you are like myself, an engineer. I'm actually a chemical engineer. What discipline were you in college? Your
I was a
undergrad?
manufacturing engineer, so
Okay.
but I practiced as I did a lot of materials engineering. So I spent a lot of time looking through a lens of a microscope, looking at a surface at 100 times magnification. So yeah,
Whoa.
so I got that deep or technical in my career. Yeah.
Wow. And so just like myself, I was in oil and gas industry for 14 years. And so you were also in the oil and gas industry?
Yes. I was in oil and gas from the very beginning of my career.
Wow. Wow.
So, yeah.
So
So
how so I guess explain the transition into from oil and gas to real estate. How did that come about?
yeah. So Jeremy, I did a lot of transitions in my life. Really brought about by perseverance. And then now I see my life as a blessing, and I want to share that with other people.
That's good.
Just a brief background. Just I grew up in the Philippines, and there's a very strong expectation from society that you either become a doctor, an engineer, or a lawyer.
Mm,
For me, I didn't like reading contracts. I don't like going to hospitals. And I was good in math. So that was a no-brainer for me. I took engineering. I did manufacturing engineering and then moved here in the late 2000s. And man, it was actually before I moved to the US, my first job was an apprentice for one of the largest auto manufacturers in the world. And my salary was $5 per day.
whoa.
$5 per day, man. So, and then my gas money to go to work was $3 of that already.
Wow.
Yeah. So there's not a lot of opportunities.
So was this during when you were going to school, college?
This was, yeah, I was working towards getting a job in for that company.
Wow.
Yeah. Yeah. So there wasn't a lot of opportunities, but I always had this entrepreneurial drive. I remember selling ice pops in the neighborhood. I sold toys in school. And then at one point, I had a video editing business to gain additional income because my salary for my apprenticeship was not really making it. So I got that. I graduated college engineering. I moved to the US, and it was tough to find a job here, right? Because they didn't credit my degree. So I started working. I was actually called to be a machine operator.
Wow.
But I had to get my foot out there. I went to the interview. Eventually, I got to my engineering job already. I moved to another company doing the same thing, engineering. And I was the five-star engineer, man. I was adding a lot of value. I was adding a lot of impact with the company. That was in oil and gas. And then I got promoted. So I got promoted, and I feel like I was promoted a little too early. I wasn't ready, and it consumed me, man. It was so. I work about 12 to 13 hours a day. It
Wow.
was no fun to be with. And the manufacturing plant that I work with at as is a 24/7 job. So I was on call.
Wow.
Constantly. So at that point, I worked so hard, it affected my performance. Although the company was doing well, it affected my performance. And um, this is pretty tough. I was actually suspended and eventually I was demoted
Whoa.
from that position.
Whoa.
I was no fun to be with.
Even after giving those long nights and long hours.
Yeah,
Oh.
for sure.
Were
So
you did you have a family? Were you by yourself, single? Did you have a family then?
I was it was just me here. I
In
have
Houston? Were
aunts
you in
here in
Houston?
Houston. Yep.
Yep.
I have two aunts here in Houston. But yeah, it was a tough spot to be in. And I was actually too busy to realize that I was slipping into depression.
Whoa.
And the only time I realized that was I had my little cousin on my lap. She was playing on the laptop and she turned on the webcam. And then it recorded my face for a few seconds and then staring blankly, and I snapped out of it. I realized it was recording. And then I played a video, and I saw a face of a guy who just given up, defeated.
Wow.
It was pretty scary. Like, this is not me. So sometimes, God has a way to show you things that you don't on a daily basis, and that was a strong message.
Wow.
So I had to make a change. I'm making the long story, but I'm showing you all the pivots that I had to make. So I had to make a change. It's like, is this really what I wanted to do? So I did MBA. MBA school taught me that. So some people go to MBA to hone in on a specific skill.
Right.
I went and did my MBA to find what I really wanted to do. So I tried everything, supply chain, marketing, and then I ended up in investment management. And this is where it got really interesting. So through the university, I was one of 17 students that managed a portfolio of funds, of stock funds.
Okay.
It was in the 8 digits back then, and we had a fiduciary responsibility to our investor to
Yeah.
make the best decision on their behalf.
Okay.
Right. What's interesting there is I remember my first ever stock trade was worth more than our house was worth. So that was pretty nerve wracking. And this is not my money. This is other people's money. What we would do is we would do a fundamental analysis going through quarterly reports called the 10K
Okay.
that any public company issues on a quarterly basis required by SEC. And if you're analyzing a small stock, it would be around 50 pages. But if you're doing Apple, analyzing Walmart or Amazon, those are several hundreds.
Wow.
It would take us about 15 hours to sometimes even a couple of days to analyze a stock. Or maybe I was just slow back then, but I don't know. And then every time a stock moves plus or minus 5%, we have to do extensive research. We have to go through Bloomberg terminals, which is super powerful terminals that scours the news and find news about the stock. And then we would report that. And there were so many times that I would have to say that, hey, you know what? This market action or this stock action was driven by a tweet or
Wow.
by the president back then or by the Fed chair or whoever.
Wow.
I quickly realized that the stock market is driven by the mood of the market. And those are emotional
Wow.
moods, right? Fear or greed. And I realized that the stock market is in the hands of a few. It's all about power, money, and control.
Wow. So yeah, you're looking at big companies and
Yeah.
I'm sure you're seeing their balance sheets, their profit and loss statements. And even though companies could be making billions of dollars net, that does not move the stock market up. That doesn't move the value of that stock up.
No, absolutely not. Exactly. So it's not really a one-to-one relationship with their earnings,
Right.
right? Sometimes their earnings would go through the roof, their profits go through the roof, and your stock remained flat. I was like, what is going on? One particular instance of this one happened recently, right? Because we have such a high inflation. But we had a rally from June to around mid-August, right? It went up from 31 to 34. And then when the Fed chair said, hey, you know what? The market's actually not doing that good. Inflation's still up. And that's when the stock market tanked back down, right? So
Ugh.
same thing with this last one on September 13th. They released the consumer price index score, which is a measure of inflation. but yeah, so same thing, the market crashed. So the stock market is not a really good inflation hedge, and it's dependent on a very few people, people who have the money, who have the control. Um, and yeah, and if you have control, you have money, you basically have power. And it
Yeah.
goes vice versa as well, right? So I was like, this is not for me.
Yeah,
So
how many people do you think? I know we don't know this number, but
yeah,
you're giving an example of you personally and your colleagues in school spending days and hours analyzing companies' financial information. Um, on the general public, we all put our money in the 401(k) and in the stock markets. How much research are we actually doing?
oh my gosh. It's it we the funny thing is we allow someone who we haven't met, we don't know, we don't trust, we don't like,
Right,
manage our portfolio
right,
for us.
right.
Even though they're taking a 1% of your assets under management over a 30-year period, that is a fortune that we're paying to someone to manage our stock
Right,
portfolio. We
right,
don't have control, right? We don't
right,
have control of the stock market because the stock market is actually affected by global factors.
right.
It's not something that you can focus on in your own backyard, right?
Exactly.
It's something
Exactly.
broader than that, something you can't control.
Exactly. And that's why we love real estate so much. That's why I love real estate because we have the data in our neighborhood to know the job conditions, job market
Yes,
conditions, the and we can know what the rental rates are. We can know which way it's trending, and there's a little bit of prediction that we can make, but it compared to the stock market, we can't predict when global leaders say something that make the price go up and price go down. We
correct,
just can't.
correct. And to your point, I mean, you're an engineer as well, so we are very strong on proof or evidence-based practices,
Exactly.
right? I don't
Exactly.
feel comfortable asking my investors to invest in my deal for something I don't have control of,
Exactly.
right?
Exactly.
So in real estate, like you said, it's more predictable. It's also tangible. You can actually go
Exactly.
there, feel the property, and see the progress,
Right.
right? So
Yeah, and with stocks, there is a risk and there is a possibility that the price of the stock goes down 50, 60, 70, 80%. Like that happens.
that yeah, that has
But the value of a structure on land,
yeah,
if we look over the last 100 years, yeah, there may be a dip in some certain markets of maybe a, 8, 10, 20% dip, but an
mhm.
80% loss of value just like that doesn't happen.
It doesn't
Possible.
happen. No, and if you look at the history of the S&P 500 from inception, I think it was the start date was 1928. If you look at the historical returns, it's around 11.8%. If you chop the last 20 years, it's actually 9.8%.
Wow.
Total returns
Wow.
are diminishing, and this is a fact. And if you factor in inflation, you take
Oh,
off
yeah.
easy
Yep.
3% off that,
Yep.
right?
Exactly.
So,
Exactly. All right. So you're in the NBA.
yep.
You're analyzing companies,
Yeah.
financials. You're realizing that this the big red flags. Global markets
Yeah.
are manipulated by just a couple few people.
Yeah. Yeah.
Then what?
And then here's what happened. So I'm in my last semester of my MBA. I haven't figured out what I wanted to do yet. So I jumped into entrepreneurship.
Okay.
And also at that time, it was we're having some difficulties in the company I was working for as well on the personal side. Um, I was starting to have issues with my marriage. And you know how sometimes you do more for someone you love rather than yourself, right? So I told myself no job is worth losing my wife for.
Mm.
So I had to make a plan. So this was the my plan. I actually made a code to make it simpler to understand. You know how we say we work day and night and then do it 24/7. So my code was, or mnemonic was AM, work every day, PM, work all night, and then repeat it the next day. So AM, PM, then repeat. What that means is A stands for set your achievements in 1, 3, and 5 years. Um, M is you measure where you are. You take a snapshot, meaning you look at your current expenses and you also do your personal financial statement. And then you plan, how will I get to the cash flow that I want? And then the net worth that I set in my achieve. And then the fourth is take massive action. See, I
Mm,
could have said action, but it has to be a massive action, a big change or paradigm shift.
that's
And
good.
then you do it all over again every 3 months. So you have a good tracking of where you are. So our plan was always the end goal was to be real estate, right? Because we have the capacity to earn more in real estate. Also, we have the capacity to impact other people through it. And then, so that's for the wealth side, long term. We have to find a way to replace our W2 income with a different cash flow source. And after extensive research, I ended up selling products on Amazon, right? So the cash flow part is supplemented by our Amazon business. And then the long term is basically through multifamily investing or other real estate assets.
Got it. I love the AM PM repeat.
Repeat.
Good.
Yeah.
So
Yeah.
AM PM repeat. What was the AM? Say the acronym one more time.
A is you set your achievement. So what do you want to do in 1, 3, 5, and even 10 years? And then you measure it through you take a snapshot of where you are right now. So personal financial statement is good for that. And also I used a tracking app called Mint.
Mm-hmm.
So
Yep.
it shows you your income and expenses every month. And then the P is planning. So my first initial stage is once I get my cash flow to 80% of my W2 income, I will reduce some of my expenses. So that means maybe cooking or removing some of my subscriptions. And then I take my massive action, executing my plan, and then
Love it.
all
AM
over again.
PM. All right. So you did the AM PM
Yeah.
and you started selling on Amazon, your e-commerce.
Yeah.
And so are you still working your W2 job right now?
No, I left my W2 job in May of this year.
Wow,
We
congrats.
got to the point where our Amazon cash flow is 80% of our
Nice.
our income, my W2 income. It got there. I found 100 different ways that Amazon won't work. It sounded really simple. Like I design a product, I send it to Amazon, they handle all the shipping. Man, I looked at 121 different products before I can find one that was profitable.
Wow.
I was pulling money every month from my checking account. I lost my wife's investment, my
Oh,
capital, and then I was like, "Oh my gosh, do I continue this?" And then I looked around. I was like, it's not over yet. I'm breathing. I can sell some stuff. So I sold my bike rack. I sold 3D printers, and then I even sold my beloved car. This was a hobby car. I was going to keep this car forever. This was my first ever dream car. I had to sell it so I can inject more capital to the business.
wow.
I'm going to do this one more time, man. I'm going to do this one more time. And sure enough, 2 years later, we got to the point where we want to be. So
Wow.
Amazon. So yeah.
So what products are you selling through your e-commerce?
So pet products. So we sell pet products and we design our own product. It's not like an existing product. We put our label on it. We have to design
Wow.
a product,
Wow.
and we to give back to communities. A portion of our profits also go to animal rescue groups here in Houston.
Wow.
Yeah,
Fantastic. Congrats. So what's the plan next
and
for the e-commerce?
yeah. So after we got to that one, we were slowly transitioning to real estate. We don't know what asset class it's going to be. As homeowners, the natural tendency was to look at other single family home rentals. We did the math on that, and it would take us about 20 single family homes to replace our W2 income. So like, this is not going to work. This is going to take us forever. It's probably as slow as, I don't know, it's not as slow as the stock market, but it's going to take us some time. Um, Due to a very serendipitous event, we accidentally met someone in one of our trips that talked about multifamily real estate. So it was completely random. It was a family friend. They happened to be in the same place. And they sold about 12 or 14 of their single family homes and invested in multifamily. And I asked them a few questions. So number one, I said, are you saying that I can and be a part owner of the apartment without having $1 million in the bank? I said yes. Like, and then second is like, I don't have experience. Are you saying that I can be a part of this deal even though I have zero experience in real estate up to this point? I said yes, absolutely. So we saw the power of leveraging other people's time, money,
Yeah.
and experience,
Yep.
and we just jumped in. Within a span of 4 months, we invested in 3 properties.
Wow.
And the way we did that was, oh, the other question was like, I am not liquid right now. How do I get there? It's like, oh, did you know that you can use your 401k to invest in apartment?
Wow.
Like,
Wow. Yeah,
man,
because you're already working, you were working your oil and gas engineering job and you have a 401k.
yeah, previous 401ks previous employers 401k. So
Yeah.
that's what I used to get started. So we
Wow.
invested in our first apartment using our 401k. And you know, not a lot of people know that.
No.
We get a surprise look. Um, so
Yeah,
we
I was that's so for me,
yeah.
I was what you said you did not do. I for me, I started out buying single family homes and renting them out and doing fix and
Uh-huh.
flips and fixing the flips because I at that time I thought that that was the natural way to
Mhm.
grow into commercial. Like you would first just buy your own personal residence, then the banks would consider you safe to loan on
Yeah.
a rental property. Then you get a rental property. Then the bank, then you think that the banks will then lend you money to do a multifamily deal, which I did a couple fourplexes and eightplex. So I thought that there was a study, there was
Yeah.
a way to go up the staircase, um, I, but but that's not the case.
No, absolutely. And it's actually simpler than what I thought.
Yeah,
It's much simpler because you have the guidance of your co-GPs. And then, yeah, I mean, so we went all in. So in, I think a span of 4 months, 4 or 5 months, we invested in 3 passive deals. So what passive means is basically we review the deal. So number one, we meet the GP. We need to, number one criteria is we need to know, like, and trust them first,
it's good.
right? And look at their track record. Second is we look at the deal, we invest, and then every quarter we receive a quarterly distributions from rental income and other income that the apartment generates.
Yeah.
So, which is a fantastic deal. One other thing is the returns, projected returns of this one is way better than the stock market with the added benefit of tax incentives.
Right, right.
So, yeah. So 3 LP deals. And then in May of 2022, this year, when our Amazon business is at that level where we want, we got invited to be co-GPs on our first first property. And I just jumped. I put in my 2 weeks notice, and then I've been
Wow.
focusing on this one full time.
Wow. Okay, so let's go back. There may
Yeah.
be listeners on here that don't understand the terms, acronyms LP, GP,
Yeah.
and kind of give an overview of what is a real estate syndication because we're talking about a real estate
Sure.
syndication, and that is the way that investors out there with no experience, with
Yeah.
like you're saying, no cash, you can even get in with no cash in your bank account, but you can use your 401k or IRA. So
Yeah.
kind of explain. Well, I guess that's two different questions. First,
Yeah.
explain what syndication, LPGP, and then second question, um, let's get into the how you can invest with your 401k. Do that second.
Yeah. LP is basically, the way I see it is co-investment, right? So there is the sponsorship team that finds the property. Let's put some numbers here. Let's say the property is worth $10 million. A big portion of that, let's say around 60% will be mortgage, so about 6 million will be loaned, and then the other 40% will be raised or will be equity from the LPs or limited partners or passive investors. So that means we pool together investments from retail investors or the everyday investors, right? And then we come up with $4 million, and then the other 6 million is loan, and then we acquire the property altogether, and then we split the profits. The active or the key here is the active partners will do most of the work, right? They're going to be running the asset. They're going to make sure that they're going to hire the property managers to run the property. And then the passive investors, basically, they're passive investors. They grow their money while they're sleeping. So that's the LP side. The GP side is so when you say GP or active investors, those are synonymous. A GP is a team that actually raises the capital from retail investors and they also manage the asset.
Fantastic. Fantastic. Okay. So now explain how somebody can take their money that they've saved up in their 401k, or maybe, and then they've left their job and now I guess
Yeah,
they need to roll over to an IRA.
correct. Yeah, it's a few steps. So from your brokerage 401k, there is a step where you have to put it in. Okay, so the key here is keyword is it has to be a previous employer's 401k.
Previous
Previous
employer.
employer's
Yep.
401k, right?
Yep.
So that chunk, even though you've rolled that in, there's still ways to partition that, and your brokerage firm knows how much you rolled over, and you can access that, convert it to a different account. Say I was with Fidelity, they converted it to a different account where it's transformed to cash. It's not no longer part of my 401k. So once that's transferred to cash, I contact another firm that specializes in self-directed IRA. For me, we use Quest Trust Company. They're Houston based. So what Quest will do is they will request access to that cash that you put in your other Fidelity account, transfer it to a self-directed IRA. And from there, you invest in the syndication deal where you can become an LP of a deal.
That's fantastic.
Right. So again, so from brokerage account, you convert it to cash and then transfer it to self-directed IRA. The process takes about, if you're starting, it takes about 2 to 3 weeks. Once you have that set up, it's much quicker than that.
That's fantastic. So the just so that the listeners are clear, when the funds are invested from your self-directed IRA into the project, into the actual investment, the returns, they go, where do the returns go? They don't go to the person, they go back to the account, correct?
They go back to your retirement account. Yes, your
Right.
self-directed IRA. Now, a lot of people ask me, okay, so if I do that, do I get penalized or do I get taxed? Right? Because this is a retirement account. I need to withdraw it once I get to a certain age. You don't, because you're transferring from one RA retirement account to another RA, right? So you won't get taxed until you pull it out, or you won't get penalized until you convert that into cash or pull out the money
That's right.
from the account. Yeah.
Right. And so, and to also clarify, those funds, they stay with the same limitations of the IRA. They are there for retirement. You're not
Correct.
putting it in your back pocket after you sell the apartment complex. You don't put that money back in your pocket. It stays in the IRA account.
Yes, absolutely.
Excellent. So okay, so now let's talk about you. So that's your experience in as a limited partner using your funds your from your previous 401k employer into that as a passive investor. Now, how talk about the switch now to you being the general partner. And I think you recently during the summer had a big acquisition of a $78 million
Yeah,
acquisition. So I guess talk about that and where'd you get the money to invest in something like that?
it was two properties together. It's 624 units total here in Houston, and it's sitting in a great location, about 8 minutes away from the biggest medical center in the world, which is the Texas Medical Center in Houston. We met our lead sponsors through networking events here in Houston. And then, unlike passive investing, where you can use self-directed IRA, you have to provide or invest as an active partner in cash. You
Right.
cannot use self-directed
Right.
IRA. So that's the big difference here. So as I mentioned in the beginning, we were so blessed. We put a goal for ourselves to have our first GP deal by December 1st of 2022. It happened, and with 60 units. So this is what happened. So we put a goal, we wrote it down, 60 units by December 1st, 2022. We got 600 units May 2nd of 2020. We got
Wow.
invited in that deal. So yeah, we had to raise a pretty good chunk of money just because of the purchase price of the property. And then we closed July 15th. And that was
Wow.
a completely different experience for us from passive to active because now we have the opportunity to share this with our network. Say, hey, you know what? This is a great way to diversify your asset and also gain tax or get the tax benefits from this. We show them the study. We even toured them to several properties, say, hey, this is what it could look like, say a similar property that's renting for $200 more. And now this is the current state. This is what we plan to do. We plan to fix the exterior first and then eventually move into, interior renovations. And there's a current gap between what the market is renting for and what this current property is renting for. And there's a big gap there that we need to fill. A lot of people think that when we take them on tours, was like, oh, this is not a good looking property. I don't want to live here, so on and so forth. You have to look at it from an investor's eyes, not as someone who's going to be living in that
Right.
property. Right? So you have to look at it like, what could it be? So you have to have that vision. What could it be in a few years after we implement this massive rehab plan? And that's the job as a GP. You need to be sure that you show them the vision of the plan,
Right.
right? And that's what you're there for.
So what is your active role in the apartments today? Like, so that was purchased back in the middle of the July.
Yeah.
So what are some of the things you're doing right now for those specific units?
Yeah. So this is fairly new still. We're still, doing the takeover transition, and then we're gonna have our first financials coming out, solid financials coming out in October. In the GP deal, we are responsible for investor relationship, right? Investor communication. One thing that we pride ourselves even in this business and also in Amazon is customer service or investor service, right? So in our Amazon business, when people send us a message, we respond right away. And people are often surprised by that because you don't really get that kind of service when you message a seller on Amazon. Same thing here. We want to communicate and be transparent to our investors. Hey, explain to them, because there's a lot of terminologies that they don't understand. Make sure to explain that to them and build relationships. And second is, as co-sponsors in this deal, we also have voting rights, decision rights on what to do and what not to do with the property in terms of the execution of the business plan.
Fantastic. So yeah, so you're talking about customer service, responding to emails.
Yeah.
So if we own Apple stock or Amazon stock as a stock
Okay.
owner, if I email them for
No,
can I email their investor relations? Will I get a
no.
response?
So Jeff Bezos, when he was still leading Amazon, he would say, "Oh, just email me, Jeff at Amazon.com." Like that never works. Like he's never responded. Hey Jeff, my package got lost. So that never works. But yeah, so here you have a person-to-person relationship. We have a very strong relationship with our investors, and we value that because we want them to be repeat investors.
Right.
And sometimes I heard a really good story where the property did not perform very well. This is not one of our deals, but the property did very well. I think after 5 years, it gained 13% only. The thing is, the investor said, I would still invest with that person because every step of the way, we know what's going on. He communicated almost every week. We're struggling. This is what we're doing, so on and so forth. And that communication made a huge difference in that investor's, life. Even though it didn't produce what it was supposed to do, the lead sponsor or the GP team communicated to them every week, right?
Wow. Wow. Wow.
Yeah.
Wow. That's fantastic.
Yeah.
Excellent. Okay, so what's next on the horizon for your real estate business? What are some of your other goals?
Yeah, some of our other goals is, so number one, we want to close the year with another acquisition.
Wow. Okay.
We've been underwriting a lot of deals. Tomorrow, actually, we're going to do a property visit
Okay.
here in North Houston, three of them. They're close together. So that's one. And then the second one is, for next year, we want to continue growing. We want to do two or three deals for next year.
Fantastic.
And we want to grow our investor database. We keep on networking. We keep on sharing this as much as we can, because I don't want people to go through what I went through, like picking stocks and having other factors affect your portfolio. This is a much a tangible asset where you can take your investors and show them the progress. And this is real. This is, and a lot of people ask me, is this a pyramid scheme, right? That's one of the questions that I get. Like, no, it's not, because a pyramid scheme, you make money off of other people's money. Here, you make money from tenants paying rent or other income
That's right.
opportunities.
That's right.
Um, because sometimes it feels like it's too good to be true. But that goes with education. As a GP, we have to educate our investors,
Right.
and make the best decision for them. If things don't align, then it's probably not a good partnership. But we need to know what their goals are, and we're there to fill that gap.
That's fantastic.
Yeah.
Excellent. So where can the investors be even more educated? Where can they find Jon?
Yeah, you can find me on LinkedIn, Jon, no H, Jon, and then last name is De Los Reyes. And you can also find us on our website. Our website is www.dlrx.us. And I want to explain what that means. DLR is from our last name, De Los Reyes, also short for dollar, and X is multiply. So we multiply our investors' money
It's
through
awesome.
investing in apartments.
Love it. Well, Jon, it was a pleasure having you on this podcast, and we got to have you back on while you're 10x in your investors investments over the next couple of years. I'd love to have you back on, Jon.
Yeah, absolutely. Thanks, Jeremy.
All right. Well, thank you. And that's a wrap for this episode of Wealth Building Strategies Podcast.